Institutional traders don't follow retail strategies. Instead, they operate around key institutional price blocks, levels where large positions are accumulated or distributed. Unlike traditional support and resistance, institutional price blocks are based on real smart money activity, giving traders a more precise way to time entries and exits. To use institutional price blocks effectively, wait for price to return to a block. Observe how price reacts. Does it reject immediately or consolidate? Confirm the trade using confluences like market structure, reversal patterns, and price action. In this example of a bearish institutional price block, we are taking a trade based on the fair value gap. Place your short entry at the FVG as price fills the imbalance and rejects. Set your stop loss at the institutional price block to protect against invalidation. For take profit, target liquidity or support levels. In this case, we are setting our risk-to-reward ratio at 2R. This approach ensures we are trading with smart money, using confluences for higher probability setups. In this example, price aggressively pierces through the institutional price block with a strong momentum candle. This indicates that the level is being mitigated by institutional orders, rather than acting as a point of reversal. There is no confirmation for a trade. If price consolidates above the block, it may signal continuation rather than reversal. Always wait for confirmation instead of assuming the block will hold. As price approaches another institutional price block, we see a clear rejection with a bearish engulfing candle. This signals that sellers are stepping in, providing confirmation for a potential short trade. We can safely enter here, setting Take Profit 1 at the upper area of the last mitigated institutional price block, where price previously absorbed liquidity. Take Profit 2 is placed at the lower area, aiming for a deeper move into liquidity. This approach ensures we are trading with confirmation while targeting logical price reaction zones. In this example, we see a classic reversal price action setup. You can enter at the neckline area or target the iFVG for a more refined entry. These reversal setups often lead to larger moves, allowing for an extended target. Given the strong reaction, we can aim for a risk-to-reward of up to 3, maximizing the trade's potential while maintaining a logical stop placement. Take your trading to the next level with institutional price blocks. Get access to it from Grand Algo and trade with the precision of institutional players. Visit grandalgo.com to get started today.